trend of slightly but surely upward motion in the oil markets. The open in Asia up a few pennies after the sort of big leap over the last week or two from the kind of stuck near 110 posture to now stuck near 120 posture. A nice chunky difference if you're selling the stuff. We've also seen back in action some sense that all markets are rising. Nikkei again, Nikkei index, the Japanese stock market index up again this morning, has had a big jump since its lows in March, April time. Let's kick off this morning with Peter Maguire, CEO of XM Australia, to make sense of it all. Peter, the markets are back at it. Your thoughts this morning?
Well, good morning, Sean. Good morning, panelists. It's been a very strong move as far as energy, as you mentioned, Sean. It was a whipsaw market last week, and what we saw up to 122, 123, and back to 113. Now we're sitting just shy of 120, or right on 120 for Brent. So it's been a trader's delight. There's not one trader I know that's unhappy with the movement. US dollar index just under 103. It's in a bit of an upward trend at the moment. So the overall theme, I think, as you mentioned, is onward and upward. We saw equities off Friday night after that non-farm payroll. They were off pretty savagely, but last night the US equities were in positive territory, and it's a mixed bag across Asia today. Australia's down 1.53, and our central bank raised interest rates 0.5. So it seems like it's rate tightening all the way through, Sean.
Let's welcome Laurie Hitayan, MENA Director, Natural Resource Governance Institute. Laurie, you're back in the news in the East Med because it seems you love Russian Urals oil. The Med, primarily Italy and Turkey, accounted for a little over a third of the 2.2 million barrels of Urals that left the Baltic Sea ports in May. This Russian oil is just continuing to flow, and even with it, prices are rising. There's plenty of oil supply, but prices are rising. Your thoughts on the outlook for the constraints on Russian oil that does never seem to be coming?
Yeah, so, from the beginning, we were saying that this is at least at the beginning, it was like there is a direction, or there is unity among the international community about what to do with Russia, because everybody was thinking that would be a short, maybe war. And then this is a good sign that we send to the Russians that what they're doing is unacceptable. And then with days, it was clear that there will be cracks, because not every country is at the same stage of how much oil they're getting from Russia, how much gas they're getting from Russia. So, and now we are seeing what's happening with the Mediterranean, with Italy, with Turkey, getting more of this discounted oil. At the end of the day, whoever is paying money, they want to pay the less of it, and as long as they can get that discounted, they will get it. Turkey is trying to play that mediator between Europe and Russia, so they are okay in getting that, no problem with them. With Italy, they're more worried about gas. They're trying to diversify their options with gas. They have signed all these deals with Algeria, but as long as they can get now this discounted product that is okay, they are going to do it, and that it will continue until the EU has taken all the decisions and implemented the decisions, and then it will be another story.
Let's welcome Walter Simpson, Managing Director of CC Energy Development in Oman, an independent oil operator in the kingdom there, or not the kingdom, in the Sultanate. I presume there's some sort of a difference, but nonetheless, Walter, what seemed to be some potential softening, or was holding the oil price closer to 110, of course, a very big number, but nonetheless, China's softness, your biggest customer in Oman, China's, the uncertainty about China demand destruction has now seemed to have lifted. Your thoughts on the demand destruction narrative as the possible one restraint on oil prices?
Not a very difficult question to start with, then, Sean. Thank you for that.
Well, it's a generous Tuesday morning. We'll keep all of the difficult questions for Peter today.
Yeah. So, look, I wish I could give you a simple answer to it, and I can't. Clearly, there was concerns, but with the COVID restrictions being lifted in China, everybody's optimistic that there will be demand rise again. And I think that's what's played through. Is it real? Is it going to be sustained? Is the economy, there's talk of fears around the economy in China, just as there is everywhere else in terms of heading towards recession. A lot of the metrics that you see indicate with inflation, etc., that we should be seeing a recession around the corner. But when you look at everything else that's going on, demand growing, growth growing, we've managed to resist the impact of the Ukraine war. I don't know. It's a tough one. It doesn't seem to be real in terms of what the markets are thinking at present in that demand restriction. And my sense is that people are still optimistic we're going to keep using these large amounts of oil. I don't think the increase in supply that OPEC Plus announced is going to make any difference whatsoever, even if it's real, to be perfectly honest with you. So, yeah.
Well, let's give Peter McGuire that difficult question. How real, Peter, is the OPEC Plus announcement last week? The market, like a salmon you try to hook on a summer's day, spit it out and kept on moving.
Well, it was real, Sean, and I think that as the market absorbs not only from a production side, but the other side is what did we expect from price? And I think everyone was thinking, well, maybe it's going to be a 115, 110, possibly you might see a 120 handle, and then it's just ratcheted up. So it seems to be onward and upward, and we may even take a 125 or 130 out this month, only being early in the month. So I think the overall appetite, you're talking about stronger growth and stronger demand picture, certainly from China as it reopens. Secondly, across Asia, strong growth across India, and really the whole world is very much embraced. So if we don't fall into any other COVID issues or monkeypox or anything like that, then it's going to be, I think, a fairly strong number as far as demand leading up to Christmas. And that's not a bad thing for a producer.
What about Sri Lanka debt default pox that spreads to Nepal, Pakistan, and who else? I mean, from the point in the context of the Asia, I mean, it's not long ago the Asia contagion of the late 90s, and suddenly the dominoes fell. I'm just wondering your thoughts on the fragility within some of the Asian economies and what, or if any, contagion would exist.
Well, there would be some form of contagion, Sean, and there's no doubt that that will be a major concern for debt holders and where central banks have to play and bailouts and so on. So I think it's going to be a tough one. I'm not sure as far as how deep a contagion, but as you mentioned, Pakistan and Bangladesh, and they're big population bases. So it's a high degree of uncertainty at the moment, and maybe it does wash across to the likes of Myanmar and further afield to Cambodia and so on. So I think it's a story that will develop, and at the moment it's not getting a lot of bandwidth, but it could very quickly ratchet up within a matter of days. And I think it's just something we've just got to be conscious of.
Speaking of sovereign defaults, let's go to Lebanon. No, Laurie, we won't talk about Lebanon's problems, but nonetheless, I wanted to get your insights on the decision last week within OPEC Plus. What's the sort of the geopolitics around it, if you like, and will we see now finally the UAE and Saudi, the only ones really with any spare capacity, to finally produce beyond their quota, which they've been resistant to do up till now?
Look, I think that gesture was very political, right? Because whatever they say, you cannot just remove the politics out of it. It came at a time when there were the talks that President Biden is coming to the region, and President Biden would be meeting with the Crown Prince Mohammed bin Salman. So all of that, and there were gestures from both sides. And then we saw that, okay, they decided to increase it by 200,000, which wasn't like something that the market was crazy about, because we all know that there is an issue with the increase in supply, and we know that there were those quotas, but a lot of the countries are unable to meet the quotas again. So that was a gesture that yes, the UAE, Saudi Arabia are ready to increase, are ready to go that way. So it was a goodwill gesture that I don't think that mattered much. It mattered more on the political side and on the market side.
But just to drill into that politics a little bit, I mean, it seems a fairly empty gesture if indeed there is no barrels behind it, because ultimately, 220,000 on a press release in terms of barrels. I mean, is Joe Biden going to cross the Atlantic for a fictional 220,000 barrels?
So I don't know if he was happy or not happy with that amount, actually, because now they're saying the visit is postponed. I don't know for what reasons, but not coming, but he will come soon. Look, I think that from the beginning, the situation with OPEC Plus is not easy now, really, because they need to take into consideration Russia. They don't want to lose that tie. At the same time, the UAE, the Saudis, they do have this political, if you want, relations with the US administration that they don't want to ruin at all. And they don't want to make it a crisis. So at the same time, they need to take care of the market and look at the market, etc. They're in a happy situation, I guess, because the prices are high. They're making a lot of money, compensating and more, I guess, from the losses of COVID. At the same time, they're increasing a bit and not much, so that that could help. Russians are okay with that, because Russians don't want to see like increase when they cannot. They can produce maybe, but they cannot sell because of the sanctions. And the Americans are okay that the trajectory is that, okay, these people are going to increase going forward. So I think they made everybody happy. Tout le monde a gagné, in a kind of, if you want to put it that way.
Walter, did they make you happy? I mean, we had our regular commentator Sarah Akbar on yesterday, a board member of Petrofac, one of the top oil services companies in the region, saying that every country in the Gulf is doing everything they can to maximize the production, and indeed she thinks everybody's already at that point, if not very close to it. And in doing so and scratching for more barrels, Oman announced this week the amazing opportunity to possibly a new find to increase production capacity by 10%, by up to 100,000 barrels. They must have been doing a lot of scratching in Oman to search for new barrels. Your thoughts on on that idea that we are in the Gulf and in Oman perhaps at capacity, near capacity, and maybe in doing so discovering new barrels?
So look, I think we are at capacity at present. And look, that announcement is, an overnight success based on years of hard work. And actually, it's one of the cases where I think it is a testament to the success of government policy. And by that, what I'm getting at is, for a number of years, the minister has had an aspiration to grow production by 10%. And that aspiration has been backed up by the encouragement from the ministry. So even during COVID, when oil prices were low, all the operators were encouraged to maintain their exploration programs. And so that's money out of the ministry's pockets, because you're investing capital that they could take as profit oil. But they were encouraging to keep exploration going. And so their policy around getting exploration done was backed up by putting the money behind it too, and supporting the operators in it. And that's now coming to fruition as they see these gas discoveries, they see the oil discoveries, and they have the potential to achieve that 10% growth because of the policy around let's keep investing. Now, it's easy to invest in good times when you're making $120 a barrel. Investing in it's easy. It's a lot harder when the price is at $40 or $50 a barrel. But the country was prepared to encourage people to invest in that time. They kept the licensing rounds going. The terms are favorable here. People are attracted to invest in the country in the oil and gas space. And they've had a very stable regime, which is really valuable for people looking for long-term investments. So I think that 10% announcement is not something that's just an overnight, oh, great, we had one big discovery. It's a result of a lot of years of hard work and years of consistent policy to drive that.
And of course, in Oman, which had, it's not that long ago, that was struggling with a very big challenge in its water cut in its reservoirs 10 plus years ago. Production had dropped down to 600,000 or so, and has really done an amazing job over the decade to get that back above 1 million. And so I can definitely acknowledge that sort of quote unquote hard work as you referenced. Peter, the big question on the point of opening of China, do we interpret that they have stepped away from this kind of draconian zero COVID policy, or could we slam back shut very soon? Again, we're already seeing in Hong Kong a resurgence of infection rates. Your sense of where China's going with this opening at the moment?
Well, Sean, they'll keep a very close eye on what happens in Hong Kong and how that rolls forward. And naturally, if they have a reinfection rate on the mainland, I think it'll be two hands on the wheel and they'll lock it down again. But at the moment, it seems to be gaining traction and for a positive tone, good for naturally the consumers, good for the man and woman on the street, and hopefully we can put that behind us. But it's just a wait and see. I think everyone's under the same sort of situation. We've got a green light at the moment, but that doesn't mean that you could hit an orange somewhere along the line in the next matter of weeks or months. But you are in a summer period, and that's hopefully going to be a better situation for us.
And does that indicate, I mean, from the point of view of all things dig out of the ground in Australia, that it's, full battle to opportunity in China? Where's that relationship? We saw reports the last few days of a Australian military aircraft of some description that was engaged with a Chinese, or some noise there. Where is that China-Australia relationship now, given the reopening and the obvious opportunity for Australia?
Well, I think from what I'm hearing, Sean, that certainly miners and producers are very, very happy with the current landscape. They're exporting at record numbers. We're not going down the pathway that we were a couple of years ago with wine and crayfish and certain other commodities that were, well, I'm not saying blacklisted, but there were issues with them as far as export or import. So the miners are very strong. Coal consumption strong, as we know, and this could be a reasonably good time for Australia over the next 3 to 6 months. We've just got to see if it remains unlocked, and which hopefully will be a positive tone for our export market.
Laurie, Mr. Erdogan, your neighbor in the East Med, is playing hard to get vis-a-vis the new NATO members. There is a vote of in no confidence in the Swedish parliament today, where the Swedish government could fall today, based on the willingness to compromise on the Kurdish issues that Mr. Erdogan has put forward as a sort of gateway to membership of NATO. He wants what he perceives as Kurdish terrorists based in Sweden to be deported, extradited to Turkey. And so the government in Sweden is in a very difficult wicket today. We'll have to see how that plays out. But your analysis on President Erdogan's position vis-a-vis NATO and vis-a-vis then this whole alignment with NATO versus Russia?
Let me tell you, so this is the Middle East, and this is the East Mediterranean, this is the Orient. So
there's a price for everything.
We talk about the bazaar. The bazaar is always open for bargaining. So Mr. Erdogan definitely would have decided to do the big bazaar, and he's now on the big bazaar, leading the big bazaar. Definitely he will use this card and his position in NATO and being able to veto or to object on entering of Sweden or other countries to get as much as he can. So this is the grand bazaar now, facing the new Sweden or others to enter, and he will play this card to the end, and he will get as much as he can get out of it. So from political gains to these kind of dissidents on economy, he will play the whole card. So he will do that as much as, and he will squeeze them as much as he can to get what he wants. And Don't forget that he has elections somewhere in 2023, if I'm not mistaken, and the country is not doing good. So he needs all these as part of his campaign towards the elections in 2023. And 2023 is very important because then you have this all 100 years of the new Turkey, the Montreux Convention, all of that. So it's a very important milestone. He doesn't want to go into that when he is weak. So definitely, maybe Sweden today is paying that price, but it's definitely Mr. Erdogan's Big Bazaar show.
The Big Bazaar show. Let's get the big survey show up this morning and see what the view of the room is vis-a-vis this OPEC plus deal. My question ultimately is, in order for this OPEC deal to make any sense, it has to be that Saudi and the UAE are going to pump more oil than their quotas, which they've been resistant to do now for 2 years, even though most OPEC members cannot meet their quotas. Will now finally, in the aftermath of the deal last week, will Saudi Arabia and the UAE now increase their oil production levels over and above their quotas to make up for the shortfall of the rest of OPEC? That's the question. Or indeed, will this OPEC plus announcement last week just be an empty page because they've been obviously well behind their production levels up till now? So welcome the views on that. Walter, you're obviously running an oil operating company, looking hopefully to have the opportunity, like others, to add to the production capacity if indeed the opportunity presents itself. Of course, you have to be lucky in the ground, but you also have to be lucky in finding the talent and the resources and the supply chain. I'm just wondering, we're hearing all over the world, like every sector perhaps, they were hearing in the shale patch in the US, that there's many reasons why it's slowly moving, and one of them is the availability, talent, and technology, equipment, and so forth. I'm wondering how big a restraint you think that will be on this incredible opportunity that is $120 oil to add capacity.
It's already a constraint, if I'm honest. The supply chain is an issue. Almost every order that we have is delayed, and so I know clearly China opening up is going to help a little bit, but it's not just China. Every area we're seeing issues with the supply chain, partly in the manufacturing and partly in shipping, of course, with the shipping rates and the challenge for getting freight slots. So that's already having an issue for us. But on top of that, talent is a challenge. Clearly, there's a lot of demand. I mean, everybody's out in the market looking for people to meet their opportunities. But what I'm also noticing, which is an interesting fallout from COVID, is a reluctance for people to move overseas. They want to stay at home. And that's an interesting challenge. So, yes, I think it's something we're going to have to work through.
What about some of those lessons learned during COVID, Walter, with those realities? The fact that people were unable to travel. Now, as you say, they have a choice in choosing not to, but during COVID, they couldn't. And yet you managed to find utilization of technology to bring people and talent seamlessly through digital engagement to the field, if you like, in a virtual sense. Is that any way of a solution again on this occasion?
So it is a partial solution. And certainly if you've got clear tasks that you need to do, that works. If you want to do training, that works. So you can manage it partially that way. But there is the point where you need to get that face-to-face collaboration, those brainstorming ideas, how can we get this problem solved, and sitting in the same room and thinking about those issues. That can only be done face-to-face. And that's where I've seen the shortfall of the remote working. Getting that face-to-face collaboration is a challenge, and there isn't a substitute to the face-to-face for it that I've seen yet. And so partially, you're right, we can work through it using the technology, and we can manage a lot of the issues around task delivery. But when it comes to the creative ideas, you do need that face-to-face, and that's where we need to have it.
And so far, you're not seeing, I mean, with all of the major service providers, Schlumberger, Halliburton, and so on, pulling out of Russia, whatever resources they deployed on the ground there, that's not making any obvious impact on the availability of all of that skill and technology in other geographies like Oman.
Not yet.
Not yet.
Maybe it will, but it hasn't so far, that's for sure.
Peter, dollar hits fresh 20-year high versus the yen today. What's going on with the yen? I mean, where is the dollar going? I thought the dollar safety play was over, and it seems to be holding around. Sterling is at a 3-week low, but particularly on the yen, what's going on there?
I mean, it's been wild, Sean. At 120, we got a 132.68 handle for the yen, US dollar yen, which is just, everyone put their mind back. It was only a couple of days ago and we were at 128, 129, and it's just booted along. Also, the US dollar's come under a little bit of pressure to the upside. So it's not only are we seeing a little bit of softness as far as euro as well, but that yen has really capitulated. No talk at all as far as BOJ raising rates, and everyone else is full steam ahead. As I mentioned, RBA today, we've got Lagarde banging the drum. You could see 25 basis points there. Certainly Jerome Powell and his troop, they'll be off to the races this month and next month, and which in turn could even soften the yen further. So great time to travel to Japan. Not really good for the domestic economy as far as exports being paid in high yielding dollars, but hey, it is what it is, and it's far better than I think when I put my mind back to 85 and the yen was at 242 to the dollar. So
why the yen is typically like the dollar. The yen is a flight to safety, like the Swiss franc, but at this moment it's clearly not. Has it lost that function in the global economy?
Yeah, Mrs. Watanabe and all the traders, they're just selling it, and it's just been an enormous trade for them. But there's just been no attraction to hold yen. The Nikkei's done extremely well, as you mentioned earlier in the show, sitting just under 28,000. So it's onward and upward for the Nikkei. Yen's coming under pressure, and yeah, I think this summer could be a good time. Firstly, to visit Japan if we're allowed in, and secondly, yeah, further softness for them.
But don't think about emigrating there because they won't let you in, apparently. Laurie, looking at our good friends in Libya, the production is closed, it's open, a guy shows up with a gun, it closes again. What's the state of play in Libya vis-a-vis a reliable amount of production that will be coming out of there, do you think, in the coming months?
Look, we cannot say that it is reliable 100%. Because the political situation is shaky. You're having, again, as always saying, like two governments that are really fighting each other or competing each other, and having the ability to go and sending people to close these fields, etc., as to put more pressure for more political gains. So again, if there is no look at political stability or at any political situation, you'll always get the situation where you cannot rely on the Libyan production for any planning for the future or anything else, because it will always be uncertain and it will be always volatile. So this is the reality of things. Lately, you remember the Americans were back to Libya because they were looking at new sources of oil, gas with this situation with Russia. Frankly, I don't know if this has turned out to be something like concrete as of an initiative or as any kind of action to really solve the political problem. But regardless of the oil and gas, I think there should be a solution to the Libya situation. They cannot keep on lingering and continue like that forever. I don't think it's fair for the people of Libya, regardless if it's for the oil and gas production.
Just also quickly on another place where there probably needs to be a solution, Iran. We had a fairly big statement yesterday by the Director General of the IAEA, the International Atomic Energy Agency, which oversees the nuclear inspections in Iran, or the lack thereof. He said that it cannot be avoided. It was the quote that Iran crossing the nuclear uranium enrichment threshold cannot be avoided. Basically, they are moving, as you've forecast for a long time, that they are on the road to nuclear weapon capability.
Indeed. It's not something that I'm proud of, that I projected something like that. That is really bad. But I think that this is the road where the current, at least the Iranian government administration wants to go, like, they feel that if we're very close to getting the bomb, that will be a game changer in the whole region. And I think that this is what they are aiming for. And as you said, like, now there are these reports coming out that there might be close to that. And I think that has been their policy from the start. Even when they had the JCPOA, I don't think they were like really not doing anything on that side, but they were getting advantage of the JCPOA and of the money that was coming in from oil, gas, and all the opening up of the economy. But they were continuing in that. I think the utmost and ultimate objective for the Iranians is to have that in their hands, so that would be the game changer in the region, and they will impose themselves as one of the main regional players vis-a-vis, of course, Israel and the US.
Walter, let's get the last word to you with the survey result. Showing up, what does it look like vis-a-vis, will the Saudi and UAE move over and above? The answer in this room, 61% no, that they'll sort of stay the course within their lane, within their remit, and that is, we're now within shouting distance of the end of this agreement anyway, which expires at the end of the summer. Where do you think all of those questions around quota go, do you think, as this end of this agreement? And of course, we're ultimately in the end game now with the adjustments last week.
Actually, it's interesting. I've changed my view on this one recently, Sean. If you'd asked me this a few months ago, I'd have said they'd have extended it, but I'm not convinced they will now. I sort of feel it's run its course, particularly with the the embargo against Russian oil and with the discounting of Russian oil still feeding markets. People will still get it. Where the oil price is, my gut feel is that there won't be the political will to extend it, and I think it'll run its course, and that'll be that. So, yeah, I'm not convinced there's a huge amount of excess capacity myself. I think we've probably reached as much as OPEC Plus can deliver, and each country will go its own way from here on in, is my gut feel.
Yeah, it does feel like it'll be a very, very difficult job to jawbone all of those new quotas into the consensus when it feels like it's not such a critical thing to fight over, because there's a place for everybody at the moment. And maybe when the tides...
Exactly. Yeah, I mean, they put it together when there was a burning platform and they had to deal with a crisis. There isn't a crisis right now for them. Oil prices are high. Everybody's producing as much as they can.
The only crisis now is what to do with all that money. Give it to Peter and let him put it into the equity markets. We have to wrap it up there. Peter Maguire, as always, amazing from Sydney. Laurie Hatayan from the amazing, beautiful Beirut, which continues to be a bright light in the Mediterranean, and everybody should go visit. Walter, thank you as always from Muscat. Have a great day, everybody. We'll catch up 10:30.
Thanks very much, guys. Thank you.
Bye-bye.
Cheers, Walter. See you, Laurie, Sean.
Cheers, guys.
Thanks, guys.